I'm Yahoo Finance executive editor Brian Sozzi. You're taking a look at a live shot of the opening bells on Wall Street on this Thursday morning. ESPN Chair Jimmy Pitaro ringing the bell at the NYSE to celebrate the launch of ESPN's new direct-to-consumer app. Quick plug for my Yahoo Sports friends. Big launch for them this week with the Yahoo Sports Network. More than 60 hours of original programming each week. Go check it out on Yahoo Sports and major FAST channels. Meanwhile, Origin Investment Corp getting things popping there over at the NASDAQ. Now, markets are eagerly awaiting Fed Chair Jerome Powell's Jackson Hole speech on Friday, and they're also watching hot tech stocks, which have had a very limp week. Market darling Palantir has notched 6 straight losing sessions into today, wiping out, get this, $73 billion in market value in the process. This will be a special edition of Opening Bid, though, something we are calling our deep dive. We will be drilling into the state of retail with Walmart out with a mixed quarter this morning and Target out with a brutal one on Tuesday. Really, it's a horrible quarter from Target. I'll have much more to say on all this shortly, but let's first head down to Yahoo Finance senior reporter Ali Canal at the NASDAQ in Times Square for a quick check of the markets. Ali.
Hi, Soz. Well, we are opening here in the red. We're seeing losses concentrated in tech, down about 0.4%. Dow also down about 0.5% as Walmart earnings came in short of expectations. The S&P also down around 0.4%. And this comes at a time when we've been talking about this rotation in the market, how we've seen investors take money away from some of those more momentum trades into maybe more underappreciated areas of the market. If you take a look at the sector action over the past 5 trading sessions, you'll see that tech continues to trade in the red here, down more than 3%. Whereas some of those more defensive plays like healthcare, real estate, consumer staples, they are your biggest leaders over the past 5 days. And if you even take a look under the hood of the NASDAQ 100, you're going to see Palantir shares. They are down about 14% since the 5-day period prior to today. You are seeing shares trade down again this morning, off around 0.5% there. Remember that Palantir was the top performing stock over the first half of this year. So just something to keep in mind as we continue to track these concentration risks in the market and how traders are assessing the rotational trade at work. Also, I mentioned Walmart earnings, and that's something that we will be talking about continuously throughout the show this morning. And it's one of the top trending tickers on Yahoo Finance. We are opening down below 4% at this point. Now, this comes despite the retail giant raising its full year outlook for both profit and sales. We saw revenue beat expectations, but earnings fell short. And Walmart, of course, is a bellwether when it comes to the U.S. consumer. So we'll be talking about that throughout the next half hour, Brian.
Wow, Ali, that's a real sloppy open for some of those tech names, NVIDIA, Tesla, and Broadcom. All right, we'll check back with you in just a moment. As I mentioned, this is a special episode of Opening Bid that we are calling our Deep Dive Edition. The topic on the docket, the state of retail. Now that we have earnings out this morning from heavyweights Walmart and Target. Target out yesterday, I should note. Both of these earnings reports couldn't have been more different, though. Each clearly showed the impact of the Trump administration's tariff war and the more nervous shopper we were seeing in various economic data releases. Here's where I'm focused. First, Walmart continues to trounce Target seemingly in every single category. Store sales growth, online sales growth, profit margin expansion, and yes, even guidance. Target's new CEO, Michael Fidelki, will have to move quickly to fix a lot of problems to take the fight back to its rival Walmart. Chief among them, just run a more operationally sound business, says retail expert Jeff Mackey.
What Target needs is kind of, to be blunt, a little kick in the ass.
All right, 2, I think it's worth spending some time looking at Walmart as a standalone entity independent of rivals such as Target and Amazon. Will do just that, looking how Walmart is continuing to defy conventional thinking with its sales growth and overall total company growth. And lastly, no deep dive on a retailer right now should exclude the great tariff black cloud swirling. Target's business was hit because of tariffs, which makes sense given it sells a lot of apparel and home goods. Walmart showed more resilience as it has a larger grocery business and overseas operations. But the reality is both retailers are not out of the tariff woods as merchandise at higher prices flows into the stores soon. Here's what analyst Scott Mushka told us.
We worry about margins coming under pressure, no doubt, between the tariffs and the price discounting. Now, offsetting that for Walmart, and we'll see this tomorrow, is advertising and their membership business.
All right, the opening bid roundtable for today. Cameron Dawson, NewEdge Wealth Chief Investment Officer, and Yahoo Finance senior reporters Ali Canal and Brooke DePalma. Brooke, I'm kicking off this special edition of Opening Bid. I'm going right to you because you've been tracking these Walmart earnings all morning long. I would say they're squishy to say the very least.
Yeah, for sure. And when you size them up to what we saw from Target as well, we did see an earnings miss from Walmart this morning. And that was the first time that we heard of an earnings miss from America's biggest retailer since 2022. And so largely you see investors reacting to that. This is not what we typically hear from America's biggest retailer, from the one that sets the precedent when it comes to both Wall Street and Main Street, when it comes to how exactly consumers are responding to tariffs. And some call outs in the call that we heard from CEO Doug McMillon is that the middle and low income consumer is under pressure. They continue to gain share when it comes to the higher income consumer, but tariffs are going to cause them to raise prices in the third and fourth quarter. And that's certainly not what we want to hear after such pushback in that previous quarterly report.
Cameron, good to see you as always here. You follow the consumer. What's your assessment of the consumer where it is today? Walmart had strong sales. Target, not so good. Like, what is the true health of the consumer coming into these stores?
Well, I think the eyebrow-raising thing from this week of retail earnings is that this may be as good as it gets as far as the consumer not feeling the pain from tariffs. We heard it from Walmart, where tariffs are getting worse and worse each and every week as far as an impact to costs. But we also heard it from the likes of Home Depot, who said we had brought forward so much inventory that it really hasn't impacted consumer prices yet. So we think that what's likely to happen as we move through the third quarter and into the fourth quarter is that you're going to start seeing more pressure, not just on company margins, which is where we think a lot of the tariff impact is going to get absorbed, but getting passed on through prices in select areas. And we think that this consumer is less able to absorb higher prices than they were in times like 2020 and 2021, where they had the benefit of things like stimulus checks as well as high savings balances post the pandemic. So this consumer is just simply more stretched, less able to absorb higher prices, which all rolls into saying that we do expect margins to come under pressure for retailers and for many other companies in the U.S. stock market.
Brooke, let me ping pong back to you, because I thought this was the quarter that Target and Walmart, their margins would have been really hammered because of tariffs. Target's gross profit margins, which reflects the inventory being flowed into its stores, down 100 basis points year over year, not good. Walmart's were actually up 4 basis points. Is this, to Cameron's point, is this a second half phenomenon with tariffs and the impact on these retailers?
It certainly seems like, as these tariff deadlines have extended and extended, that the brunt of the tariffs haven't quite hit the bottom line yet. And what we heard on the call was that they're going to focus in on operating margins. They're going to focus in on bottom line profitability in these coming quarters as they have to offset now this new wave of inventory that has these tariff rates, which still are largely unknown, in effect. I also think it's important to note here that they did say on the call that their imports do come from China, Mexico, Vietnam, India, and Canada. They said 1/3 of their imports come from that. We know that Walmart has said that because of 2/3 of their imports are from the U.S. domestically, they've been able to sort of, not have much of an impact here, but we do know that because of that China, Vietnam, India, Canada, where there's these ongoing tariff negotiations, the final playbook hasn't quite been in place because those tariff negotiations are still up in the air. And so it's largely still a wait and see proposition here.
Ali, I knew this was the case, but it is striking to pull up a 5-year chart on Yahoo Finance comparing Walmart stock to Target stock. I mean, it's night and day. Now, we all go to these stores. Why do you think Target is just lagging Walmart so badly? I mean, sales, online sales, margins. This has been a story that has been unfolding for 2 years, and I just can't see how it stops. I can't figure out when Target has that amazing quarter and Walmart sucks a little wind.
Well, I think consumers just view Walmart as the better bang for your buck. Now, Target also structurally has its own issues, right? I mean, we saw they're grappling with boycotts. They had declining sales, this public pushback over its diversity policy. So company-specific issues for Target on top of all the tariff uncertainties and a lot of the unknowns that the consumer is dealing with. But Walmart, again, viewed as just this company where you can get cheaper products. Now, Walmart did see across all of its income cohorts rise there, not just the higher income consumer, but also lower and middle income consumer. However, you are still seeing that the higher income consumer is outperforming. And you can look at Home Depot earnings for that as well. And when you think about the grand picture here, when you look at interest rates elevated, mortgage rates elevated, a lot of consumers are pushing off many of those discretionary purchases, those big budget items, the big projects because of the environment right now. So they're still spending, but there is some cautiousness around that. So when it comes to sort of the categories that a lot of these companies have, that is really where it all boils down to. So Walmart, I think, is just perceived as a company where you can get more bang for your buck compared to Target, and really has been able to weather a lot of these challenges better than their competitors here. Now, Walmart has absorbed a lot of costs. They still say that over the coming quarters, you're going to see that incrementally higher ticket item as tariffs make their way through the system. We are projected to have an effective tariff rate at around 18%. Currently, we're at about half of that. So that tells us that more pain is to come, to Cameron's point, when it comes to these higher prices and what the consumer will ultimately have to bear.
No, you make a good point there, Allie. Look, I get my oil changed at Walmart. I can't get my oil changed at a Target. Why? Because they have no oil centers. I've even found some pretty good steak at Walmart recently. I mean, it's good stuff and it's pretty cheap. Cameron, let me get back to you on the economy because Walmart, I think, you know, if we were having this discussion 10 years ago, Walmart doing well would be a sign that the economy is about to go in hell in a handbasket. What's your read on how these two companies did this? The performance is so striking. What's the economic read through there as we look into the back half of the year?
Yes, it is interesting that Walmart for the past few years has talking about how they've had more trade down from higher income consumers looking for value, as even higher income consumers are getting pinched. But we do know that Target does lean more discretionary in its items, so less food, a lot more housing goods, for example. And Walmart actually called that out this morning in saying that it was discretionary areas that were weaker. So this does continue to be a consumer that is hunkering down. And we've been talking a lot about this idea of the K-shaped economy, the idea that the high-income consumer has been really resilient, whereas low-income consumers have been struggling for the past few years. And the difference is that the top 10% of income earners make up 50% of the consumption in the US. So it really is watching those high-income earners and seeing the health of those high-income earners for the direction of overall consumption in the US. One thing to note there is that you're starting to see a pickup in things like credit card and auto loan delinquencies in higher income earners, which just means that at the end of the day, we all still do breathe the same economic air. And the question is, can those high income earners still continue to maintain a robust demand environment, or will we see that downshift as well?
Darn good point. All right, my opening bid roundtable is going to stay with me. Of course, straight ahead, we'll continue our deep dive into all things retail with a key call on Best Buy. And we'll dip out of retail for just a moment to get into a playbook for Fed Chair Jay Powell's Jackson Hole speech on Friday. Looking forward to that one. We'll be right back. Welcome back to our special episode of Opening Bid, where we have been deep diving, I should say, into the retail sector now that we have results from Walmart and Target. The retail earnings parade will keep on marching next week. Let's take a quick look at Best Buy, which reports on August 28th. Stock is down 35% in the past 5 years as the retailer struggles to fight back Amazon and electronics. So many great electronics for the cheap at Amazon. Electronics innovation has also slowed, prompting consumers to hold on to devices longer. Not exactly great news for Best Buy. Also not great news is the more cautious consumer of 2025 that isn't out there spending on bigly large ticket merchandise such as appliance. See those Whirlpool earnings from last week. They weren't good. I think B of A analyst Robert Ohms summed up the situation at Best Buy nicely into earnings. Said Ohms, quote, "We believe a return to growth in computing services and potential profit contribution from incremental revenue streams such as Best Buy Express and retail media are more than offset by challenging industry trends, lack of innovation, uncertainty around tariffs, and long-term market share pressure from omni-channel competition." A lot of words there. Ohms is riding an underperform rating on Best Buy into Best Buy's report next week. All right, switching gears here, Jerome Powell will deliver the final Jackson Hole speech of his tenure as chair of the Federal Reserve on Friday. And that emotional moment, at least for me and many market watchers, has sparked my question of the day. Will Powell's remarks meaningfully move markets? Still with me on the opening bid roundtable, Cameron Dawson, NewEdge Wealth Chief Investment Officer, Allie Cannell, and Brooke DePalma. Cameron, are we looking at a big move here tomorrow?
Well, we don't think that Powell wants to say a lot. He wants to leave as many options open as he possibly can because we get another CPI print and another non-farm payrolls print before they meet in September, which just means that there could be some surprises there. Another weak payrolls print would pretty much solidify a cut for the Fed in September, but we think that there is more likelihood that we could start to see some more spiciness within inflation prints. We, of course, got the PPI back a couple of weeks ago that showed this rise in producer inflation, but there's signs under the surface of consumer inflation where things are ticking up. And it's not just in goods and durable goods where we see the most tariff impact, but we're also seeing the tick up in core services ex housing, which is very sensitive to wages, which means that the fall in the labor force because of immigration policy could be impacting overall inflation. So we think the Fed's back is very much in a corner, which just means that at this speech, it probably won't say much simply because they want to strike that tone of data dependence as much as possible.
Allie, I'm on Team Cameron here. I think there is spice coming in these inflation prints over the next few months. Just my take, just looking through the prism of retailers and a lot of common sense economic data. I don't think Jerome Powell is going to say anything that the bulls want to hear. I just don't think he's going to come out and say or even signal that rate cuts are coming. Just my personal view.
Yeah, and I totally agree. I think when you take a look at inflation, that sticky services inflation that Cameron was mentioning, that's a big problem point for the Fed. And if you even read the Fed minutes that were just released yesterday, they were saying that inflation is more of a concern than the labor market. Of course, that happened before we got those significant downward revisions, and we will have that other labor market print coming out before the September rate decision. And that's likely what Jerome Powell is going to talk about at Jackson Hole tomorrow. We did see jobless claims tick up a bit today, and the trend that we're seeing from continuing claims points to the unemployment rate rising slightly to 4.3% in August. That would be up from the current 4.2% that we're seeing. But in terms of what markets continue to expect, they're pricing in that September rate cut. We're at about 77% odds, according to the latest CME Fed Fund futures. Now, it's less conviction to where we were a week ago when we were around 90%, but still the bulk of investors are anticipating that rate cut. Now, what's interesting is that we spoke with Interactive Brokers Chief Strategist Steve Sozzi yesterday on Stocks in Translation, that episode available this morning. And he was saying to look at the VIX, because the VIX, that obviously measures demand for volatility protection against S&P options. The standard VIX reflects options about 30 days out. However, if you take a look at the VIX 9-day, that includes things like Jackson Hole and even NVIDIA earnings, that's barely budged here. So that suggests investors aren't rushing to hedge against short-term risks here. That includes Jackson Hole. So maybe we won't see that crazy reaction in the stock market tomorrow, especially since there's been a lot more commentary that Powell likely won't say too much. If anything, I think he might lean a little more hawkish. But again, we'll have to wait and see. Typically, there is a lot of volatility around this symposium. And September in general typically leads to more volatile pricing action. And you can even see that from some of the rotational trading that we've seen over the past few days.
Allie, you are right on with that analysis. Jerome Powell has signaled nothing. It is amazing to see those market expectations for rate cuts.
Amazing. I don't really know what markets are hanging their hat on. I guess it is this perception that CPI maybe came in, roughly in line. That helped fuel a lot of these expectations. But again, even in the CPI print, services was still sticky. Of course, the PPI print didn't really move the needle much when it comes to expectations, and neither did those revisions. So I just think markets are hoping and praying, really, that we see those rate cuts. It's something that we could see reinvigorate the housing market, which, even these retailers have talked about. That's been really stagnant. It's something that President Trump really wants as well. However, I just don't see Jerome Powell leaning too far into that when we still have a lot more data to come before that September decision. And even if you look across Wall Street, Brian, economists aren't saying that September is a sure bet. We have Morgan Stanley still calling for no rate cuts this year at all. So it's not even like economists on Wall Street are fully on board with that September rate cut. There's still a lot more to be seen. And when you have both sides of the Fed's dual mandate really competing against each other and creating greater risks of stagflation, that makes the story a lot more complicated.
So true. Brooke, I used to enjoy reading Walmart earnings reports. I would go into a room, I would just put some relaxing music on, and just like think through how the business is being run operationally, what they're selling, what they're not. Now I can't even enjoy these reports anymore, Brooke, because I'm just looking for inflation and tariff impacts and keywords. But again, that's just my own personal problem.
It's absolutely true. And I think that it's just interesting to see what these retailers say about how exactly they're handling and negotiating these tariffs have larger implications for the overall economy, especially after back in May, we saw President Trump combat or rather fight back against Walmart after they said they would have to raise prices. No Truth Social post has been made this morning, but as you could see within the earnings call, we heard tariffs mentioned a handful of times, as many analysts had questions on the call about how exactly it plans to offset this impact that tariffs will have on ultimate margins. And I think it's just interesting to see the way that all these different retailers have addressed tariffs. You know, Walmart primarily selling groceries here in the U.S. and so sort of being able to offset a bit of that impact of tariffs. Then we have Target, largely discretionary. And also we heard from Lowe's and Home Depot earlier this week about their mitigation tactics around tariffs, like working with their supply chain, negotiating with their suppliers and trying to, not push along costs to the consumer as much as they can, because they know that right now consumers are still pinched. They're still navigating this quote unquote uncertain environment. And that hasn't really changed from the first half of the year. That's going right into the holidays. And what I'm hearing from my sources is a majority of shoppers actually leaned in to the promotions that we've seen this summer in order to hedge against those tariffs. Something like nearly half of consumers have already done their holiday shopping. And so it's not just holiday, it's not just back to school. It's this slew of retailers trying to get Americans back in the door to, ultimately get the best bang for their buck and really get them in the door to spend when they're so weary.
Cameron, last word to here. Jerome Powell steps up to that mic in that wood panel lodge, stuffy wood panel lodge for last time. What if he says nothing? Is that the trigger point for a correction?
We don't expect him to say anything, and I don't think that the market is necessarily expecting him to. We think that the volatility that we're seeing in markets right now is more of a digestion of the fact that things like high beta, high momentum had run very far, very fast, and that just is reaching its logical end. Now, if Powell comes out and is hawkish and really pushes back against this notion that the Fed will be cutting rates at all this year, that certainly could trigger a reaction. But given how weak the revisions were to non-farm payrolls, we don't think he's going to strike an overly hawkish tone. So again, it's going to be right down the fairway, as neutral as he possibly can, to keep as many options open going into September.
Cameron, I wonder if this tradition continues at Jackson Hole with whoever President Trump appoints to the Fed.
I sure hope so. Jackson Hole is beautiful.
You like it? Okay, all right, fair enough. We got to ask some tough questions here at Yahoo Finance. All right, big thank you to my contributors today. Y'all crushed it, wasn't surprised. And a programming reminder, we'll be bringing you interviews live from Jackson Hole and Market Catalyst. Key interviews include Jeff Schmid, Federal Reserve Bank of Kansas City President, and Beth Hammack, Federal Reserve Bank of Cleveland President. Big interviews led by our very own Jennifer Schomburger. Psyched for that one. All right, that's it for our special deep dive episode of Opening Bid. Before you go, one forward-looking thought of the day. Sure, it's easy to buy stock, but it's something else altogether, understanding the company behind the stock. Companies don't operate in a vacuum. They have ruthless competitors and operate in unforgiving economic conditions around the world. It's vitally important to assess all of these things to make the proper informed decision. Deep dive analysis will ensure you have more winning companies like Walmart in your portfolio, as opposed to outright laggards like Target. Straight ahead, we'll get those key Fed interviews live on Market Catalyst. Don't go anywhere.